Apple. People think it could be a stock that has slowed its growth but remains a long-term hold. And today, we will find out in our 10-minute stock snack. After spending hours analyzing 10 years financial on Apple, the biggest phone, software, and services company, here is the 2 key insights I find out. I'm going to blend the insights in this 10 minutes video for you to snack and go. At Stock Snack, we make stock analysis simple and clearer. Here is the 4-step framework we use to analyze every stock. First, the price projection. We identify the stock's profit potential over the next 10 years. Second, the benchmark test. We compare that potential profit against the market giants, the S&P 500. Which is better? Third, the business model. We analyze the company's story and its revenue source to see if the profit is sustainable. Fourth, the financial health check. We run the numbers to expose the underlying risk and strength. By the end of this video, you will know what is the profit. Is the profit good or bad? What is this company doing? And if it is financially healthy. Okay, let's start with the price projection. We are using 3 approach from their profit, from their cash flow, and their dividend. Right now, the price of Apple is $279. First, estimate Apple stock price 10 years later with their profit. With the growth of Apple, we think the price will be $553 10 years later. I then do the similar analysis with cash flow and dividend. The detailed calculation, find it in my channel. And we average all 3 analysis up, Apple will worth $408, which is 0.5 times return in 10 years' time, or estimate CAGR of 3.88%. The profit is around half the money you put in. To know if it is good enough, we will compare it with the market S&P 500. S&P 500, the 500 largest U.S. company. It is currently priced at $617, and we estimate that it will be $2.2K 10 years later. This estimation is based on the last 10 years' growth, which also means the estimated profit on investing in S&P 500 is 2.5 times with CAGR of 13.35%. So, to conclude the price projection, Apple, the biggest phone, software, and services company, is bringing us profit of 0.5 times with CAGR of 3.88%. And the S&P 500 is bringing us profit of 2.5 times with CAGR of 13.35%. Therefore, we can conclude that the S&P 500 is a better investment than the Apple, the biggest phone, software, and services company. Analyze stocks can be challenging. Therefore, I am leveraging on this site. Access historical data of annual reports in just one click. If you're into fundamental analysis, trust me, you will love it. You can find the link in description below. Next part of our framework, understand the business. 2 parts, the general information and the revenue source analysis. Starting from the general information. In short, Apple, from a tiny garage with Jobs and Woz to a global giant. Their strategy is simple. Beautiful, premium hardware wrapped in a tight ecosystem with high-margin services like music and apps, creating strong brand loyalty. Solid management keeps steady hands on the wheel. The future focuses on AI, health tech, and new devices. Apple's secret weapon is total control. Hardware, software, services, all under one roof. Key turning points. The IPO, Jobs' return, and the iPhone. A ride from garage to trillion-dollar giant. Next up, the revenue source analysis. iPhone still drives half of Apple's revenue, acting as the engine. Services account for a quarter, with recurring payments from iCloud, Apple Music, and App Store fees adding up. This shows Apple is moving beyond just selling gadgets to building habits that create recurring cash. While iPhone growth is slow, services and wearables are growing fast, above benchmark. The future momentum is clearly coming from these faster-growing segments. Right, last steps of the framework. The financial health. 4 Apple financial statements. The combined financial score is good, based on 15 metrics with good scoring out of 22 total metrics. Breaking that down, they have a good balance sheet. We checked 7 metrics, and 4 of those metrics received a good score. They also have a good income statement. We looked at 9 metrics here, and all 9 metrics came back with a good score. Lastly, they have a bad cash flow, where we checked 6 metrics, and only 2 of those metrics received a good score. In conclusion, while the company presents a fortress-like financial position, boasting high cash reserves, strong profit margins, and minimal debt, it's not without its challenges. Specifically, we've seen historically low share buybacks, a potentially scrutinized low tax rate, and massive capital expenditures that ultimately cause the reported net income to outpace the actual operating cash flow. To go through the detailed financial statement analysis, check out the other video in my channel. The conclusion: buying Apple, the biggest phone, software, and services company stock, by the profit-wise S&P 500 is having more potential than Apple. However, it is having a good financial health. It's a stock worth monitoring. Now, the analysis is complete. Once again, if you need a tool for your investment strategy, give a try on the site I use. Link is at description below. They provided sufficient free tools for you to work around. If you ever want an upgrade, promo code is StockSnack. Institutional grade data with less than $1 a day. One day, one stock. See you again at StockSnack.